Brendan, welcome to Living Off Rentals.
Great. Thank you. Happy to be here. Happy we got to meet at a conference. Kirby, we haven't talked a really long time, really since, back your Chicago days.
Yeah, absolutely. Yeah, no, Brendan and I go way back. We both were working at the startup incubator in Chicago called 1871, which is a really big incubator. We were working for different companies at the time, but we were both there at the same time. And I recently learned how he's now working with a company that I think this community would really benefit from. And that's why I asked Brendan to be on the podcast today. The company is called Rocket Dollar, and they're an online company that allows you to self-direct your retirement funds to invest in basically any type of investment that you want. Yeah, including rental properties, which is a huge question that I get all the time. How can I tap into? Some people have hundreds of thousands of dollars or more saved in these retirement accounts that tend to feel like a vault that they can't access until they're 59 and a half or whatever the age is. And so it's not really benefiting them. But it turns out that you are allowed to tap into those dollars and use them to buy rental property that can cash flow really well. And then it's, tax free or tax, advantaged. So Brendan, if you can start off by sharing a little bit of an overview of what Rocket Dollar is and how you started working with the company.
Sure. Yeah. So Rocket Dollar is what's called a self-directed IRA provider. That's the name the industry is given. I don't expressly like it too much because sometimes people get a little confused and say, I can trade my own stocks. I have a self-directed IRA. When we talk about a self-directed IRA, it's really an IRA that can invest in alternative assets. So alternative assets is super broad, really just means anything that's not a stock or a bond or that you're finding on the New York Stock Exchange. So real estate, hugely popular with our investors, cryptocurrencies, precious metals, private equity or hedge funds, really sometimes can be an amazing investment opportunity. And then you go click in your IRA at TD Ameritrade or Fidelity, great companies for stocks. And then you try to access or ask about that. They're almost always going to say no. They might say, hey, we have a traded REIT for you. And there's a few of those, and they really do kind of move with the stock market. So a lot of our investors say, hey, I know real estate. I know private startups. I'm in a small town and I see farmers just down the road that do the same thing I do. I'm an expert in that. And that's why real estate investors really attach to our product, a self-directed IRA or a solo 401k, is they can go out and put their retirement into the assets that they know and that they're an expert in. Couple things about Rocket Dollar that we've tried to change in the industry is just bring fees down. People are used to pretty affordable fees in stocks and bonds, and advisor fees are coming down. And then they would see $1,000 or multiple hundreds in a huge fee sheet, like 15 or 20 things long. So we decided to really bring these products to real estate investors and other types of investors for $360 and then just $15 a month to maintain the account. And then we have a premium gold account that's $600 to open and $30 a month for people that just want a bit more phone support, maybe a little bit more tax document help in there. So we started about 4 years ago. We have thousands of customers. We're approaching $1 billion in assets. We're getting very close there. I'd say about a third of our investors are invested in real estate at any one time in our platform. It's usually the highest amount in asset value on our platform. Sometimes crypto goes a little crazy and takes the top spot for a few weeks or months, but always one of our top 3 assets. So really happy to be on the podcast here today. And what do I do at Rocket Dollar? I do our business operations. So kind of, any squeaky wheel, trying to make that efficient. I do some of our sales partnerships. And a lot of our knowledge base is trying to bring a very complex topic and make this much simpler. A lot of people haven't heard about this before. Kirby, we'll get into some of those weirder real estate rules and IRAs today. Just try and make that really easy to understand, just how people understand how to invest in stocks and bonds. So you might have seen me on some Rocket Dollar webinars before if you've checked us out. And excited to talk here today, Kirby.
You just answered all my questions, so I think we can wrap this up. I appreciate it. No, I'm just kidding. What's that?
All done.
Yeah, exactly. No, thank you. No, that was a great overview, and there were several questions that I was going to ask that you did go into. So, but one thing I think to start off with is if you can kind of talk through the process of how like it works. So I understand
Okay.
the theory around taking your investment dollar or your retirement dollars, putting them into real estate, but like the tactically then, if somebody has an IRA that they currently have with Fidelity or whoever, how do they get it from there to actually in a real estate deal?
Okay. Got it. And I'm going to talk about two types of IRAs today, Kirby, because I think both of them, we just released a major update, but real estate investors tend to favor certain ones at certain times. So I'll kind of get into that. And the first one I'll talk about is the more traditional method that most people feel more used to when they start off. It's called direct custody. So I'm going to like backpedal a bit to, if someone wanted to get an investment on TD Ameritrade or Fidelity, what would happen? They would go to the custodian, the big corporations at TD Ameritrade or Fidelity. They go talk and ask, hey, I have an asset. I would love to be, approved on your platform. So, things like stocks, New York Stock Exchange, IPOs, those things get automatically approved. They just add them immediately. When it comes to alternative investments that are not stocks or bonds, these companies are a lot more hesitant to approve things. So a lot of investors go to a self-directed IRA provider and a custodian that's more flexible with these assets. So they'll go to a company like Rocket Dollar or a competitor of ours, and they'll say, hey, I would like to open a direct custody IRA. This IRA, they can start rolling over funds from Fidelity or TD Ameritrade, just like you can move from any IRA to another or an old workplace retirement plan. So now you kind of have an IRA and that is funded with your dollars, let's say $500,000. And then you say, hey, I have a real estate deal that I would like to invest in. Let's say it's just a limited partnership. You would go to the direct custody platform and you say, hey, can you please approve this investment? They would look over some documents and they'd be flexible with that, unlike TD Ameritrade or Fidelity, who would pretty much always say no. And once the investment is approved, then your funds can be released from the custodian and be sent to the limited partnership investment or an actual individual property. And that with that process, it's really good for real estate funds. Just going into a simple real estate fund, something kind of passive, super easy. Don't have to worry too much about it. However, we're talking living off rentals here. We have a lot of people that like to invest in individual properties or, vacation properties. Once they get to that point, some people consider what's called an IRA LLC or a checkbook IRA. What's different about this process, it's an IRA, an LLC that Rocket Dollar would create for you, and a bank account. And you get a lot of flexibility to send money in and out of that bank account. So, if an investor is just going into a fund one time, they're like, why do I need this? I don't need this. But once you start talking to a vacation rental homeowner, how many times do you have to pay a cleaner, a handyman, taxes, the little repair projects, Home Depot, Lowe's, these things start building up over time. So why did people go to the IRA LLC is that, a lot of individual property owners just said, I have so many transactions in one day, in 1 week, in 1 month. Having the bank account helps me move money really quickly and make sure my handyman gets paid. The painters get paid. They're really happy. If you have the custodian in there, they can still service that. We have a custodian that can hold, investment directly, but you have to have the custodian kind of approve those money moves in and out. We're trying to make that as easy as possible, but sometimes the LLC will be better for those really, really, really hands-on owners out there.
And what's the time frame to get it from? So like if you move your money from Fidelity to Rocket Dollar, and then you find an investment property that you want to invest in, what's the time frame to get access to your funds?
Okay, so a direct custody IRA is usually about 2 weeks, but know that you have to get the deal approved. So, the money will come in quickly, but then you have to get the deal approved. So it's very simple, very run of the mill, just like a real estate fund, or you're kind of passively sending money. And those person has all their documents in a row. Usually should just be about 2 weeks. If you're going with the IRA LLC product, we're going to need at least 3 to 4 weeks, unless you choose our premium product, because it just got a few more things to set up in there. The great advantage of that one, though, is it's kind of slow to get going, but once the funds are ready and accessible, you can shoot off and send a wire or write a check that day. So in this real estate market where things are really, really active and crazy, if you don't really know the property that you're going for and you don't really have that property kind of locked up, if you're competing ultra heavily with a lot of other investors for that, you could potentially want to get this set up ahead of time. And then you'll be able to do the last little bit of work right at the end to get that through and get that check quickly. If you want the fastest time from, getting excited about an opportunity to slapping a check down on the desk of the seller, you want to go with the IRA LLC.
So just to clarify, was the 2 weeks and the 4 weeks to get it set up, or, let's say it's already set up and you don't have the checkbook LLC in place, and you want to move forward with the transaction. Is it still 2 weeks? Or
so you can get it done in about 3 to 5 days while your paperwork is good to go. I would say for either one, the biggest thing you always have to think about that sometimes people forget is, where is your money? If your money is at Fidelity, they're very modern and they let us transfer money very quickly. TD Ameritrade, Schwab, and Vanguard, they're about a middle. They're going to take at least 4 to 5 days. If you go to a really old school 401k provider and you're like, I don't even know the name brand of this, I don't recognize it, just be aware that you can take a week, sometimes even 2. If they're slow, they're sending a snail mail check, you really want to get your transfer done first. Once your transfer's in, then you can be getting money to a deal in under a week with whatever product that you choose.
Yeah, that's a great point. So if you're thinking about doing real estate in your IRA, get it set up now. Get the money moved over from your traditional IRA or your, I guess old school IRA company to a custodian that will actually allow you to self-direct it, so it's in place, ready to go. That's how we've done it. My wife and I self-directed our IRAs back in 2016, and it has been fantastic. I mean, in terms of, we've grown it many times over at this point, just because we've been able to put it in short-term loans that with, flippers, friends of mine that are flipping companies that need, cash. And it's a perfect investment for that. It can go in and out fairly quickly. And it's at a higher interest rate because it's short-term capital for rehabs. We put it into rental properties. We invested in equity in a friend's startup company that did really well, and that paid out well. So, I mean, there's so many different things that you can put it in, and it's incredible how much quicker it can grow when you're putting it in these high leverage type of investments as opposed to just a mutual fund. So that's awesome. So you mentioned fees. What is, I guess, the typical fee? Like, how does your fee structure differ from what most people could expect?
So we've been really big on no per investment fees or no AUM, which people think of. Some people might recognize that term, but it typically means like assets under management. So when people work with an advisor, they get hit with an AUM fee. And I used to be an advisor, and there's been some fee compression there. But the big thing is, you're doing something very active for me, so you justify paying that fee. At Rocket Dollar, we don't think it's fair to charge per asset fees anywhere, because that means an active investor gets penalized. We don't think it's fair to charge an AUM fee to an investor because their account's growing. Rocket Dollar really hasn't done anything. It might be the same property they owned, and then all of a sudden, those fees start ratcheting up. So we're really big on the flat fee pricing. So you'll have a one opening fee that is basically done forever, because most of the work of this happens in the first month. And then we have a $15 a month fee or a $30 a month fee to maintain the IRA. And that's really just to do the basic tax reporting and IRS requirements to keep your IRA existing. So again, how does that really differ? Really no AUM or per investment fees. Someone puts in 6 properties, all of a sudden their IRA fee has gone, 5 or 6 times what it was before. And then we try and keep that flat fee. It tries to cover as much as possible. So we still have like a wire fee with some of our partners, but when you look at our fee sheet, it's like 3 or 4 things. It is not 35, 36 different things that really keep getting a gotcha. And, some of our competitors, they'll just kind of hit you real up front. You see it, you're like, wow, that's a lot of money. The IRA took $1,000, $2,000 in a year or two. Other ones, the opening fee won't be too bad, but then make sure you pull up their fee sheet. If you look at them, and you'll see all these different kind of death of 1,000 cuts where it feels fine at the beginning, and all of a sudden you're 6 or 7 months in, you're like, wow, you just keep looking at your bill adding up a little bit each month. And especially with real estate transactions, real estate investors are usually the most active investors as far as little baby transactions. $1,000 or $300, $400 there. And that's the kind where wires or not having a checkbook or a nice fee structure can really add up on you.
Yeah, that's I've noticed that exact scenario with ours. It was pretty affordable in the beginning with relatively less assets under management, but as it's grown and we're doing more loans and more deals, there's 2 fee structures on mine. It's assets under management, like you said. So annually they'll look at how much money they're holding for you and charge you a fee based on that. And then every transaction coming in and going out, I'm getting charged a fee. And so, yeah, it definitely does add up. And that's why I was really interested to hear about Rocket.
And one last thing that's really important is that, people say like, how is this a little different than a stocks and bonds IRA? Is that, the IRS needs to know the value of your IRA at the end of the year. And if you have some of our competitors charged by assets under management, and they do it at rocket dollars, they say my property A is worth $300,000, property B is worth 90, and blah, blah, blah. And they do it at rocket dollar and they're done. And they go, okay, they're done. At some of our competitors, people go, I put 90, and then the custodian argued about it with me. Then they maybe get, a couple professional evaluations. They argue it should be here, because if it's 130 instead of 90, the IRA custodian's making a little bit more money. So there's a lot of, frustration in that. And we just tried to make the pricing and say, hey, if an investor hates it, we're just not going to have that in our fee pricing structure. That's going to help us win business if it sacrifices low dollars in the short term. People have said they really love our pricing structure, and we're going to always continue to launch new products with those flat fee religious pricing.
Got it. That makes sense. Yeah, that form too. That's interesting because we're just in the process of filling that out. What is the point of that? I guess is it if your assets are tax free anyway, why does the IRS care what the current value is?
Yeah, so it's kind of the give and the take of the IRS is. For every IRA you've ever had, there's kind of a secret form that you don't even look at Vanguard and Fidelity because they know what your stocks and bonds are worth. They know what Facebook and Google and Amazon stock because they can see the little ticker going by. A lot of assets we deal with have no live market data. I have like a little crypto ticker thing up here, but most assets that we deal with have absolutely nothing. So the only way to inform the IRS of your account value is form 5498. It's a very simple form. It only has 3 boxes on it. What's the value of the IRA in total, cash plus all the assets? Did you contribute anything or distribute anything this year? So for most young people, maybe they contributed $6,000 to the IRA, and then the balance is the only thing they're worrying about. So by law, with our custodian partners, this is our custodian's responsibility to file as part of taxes, not yours. We need to file the 5498. We help send the data to the custodian, and the custodian files that for every IRA on their books. So the IRS says, hey, we think it's great that you're working on a retirement account. You have one. We just want to know the value of that IRA each year. So they will see, hopefully, if you're doing well, that IRA is either staying flat or growing each year. And they could have some automated type of detection software there, but you really want to make sure that's updated and pretty accurate each year. If it's $1 off, is the IRS going to care? No. But if they see large discrepancies, let's say you have 2 properties and you're misrepresenting the value of one of them. And then all of a sudden your IRA jumps up to $2 million one year from, 200,000. The IRS is going to go, okay, what's happening here? If you ever get audited, you want to make sure that that has been accurate every year. So some custodians request a professional evaluation, at least like a realtor professional helping you work an evaluation. If you're not experienced in that, you'll want to report that to the IRA custodian. And then we will report Form 5498 on your behalf with our custodian partner.
Got it. That makes sense. Yeah, and it kind of reminds me. So about a year ago, the IRS was talking a lot about this, potential rules around self-directed IRA, and they were citing, I believe it was Peter Thiel, who invested in PayPal, and he put in a couple $1,000 back when it was starting, got some equity in the company, and then obviously PayPal has done pretty good. So he made millions, if not more than that. I'm not sure the exact amount, but it's an insane amount just from a small investment, all tax-free. So now they're saying because of that, we're going to restrict IRAs. And it was kind of, it was interesting because it was like they were comparing, a billionaire to like the average person. And, it's a way to make more rules on something, I think. But what's your take on that? Go ahead.
Yeah, so that was a crazy time at Rocket Dollar because things, just developing so fluidly. So we actually started writing to, our Congress people. We're in Austin here, so we started writing in Texas. I actually got a response from one of my local Texans, and we were just trying to make people aware of this, really, because other than like Mitt Romney or Peter Thiel, the general American public, they think it's like not possible to invest in real estate property through their own retirement account. So we've been educating people out there. We have also just, educating, Washington. Hey, this is a big thing. This isn't just billionaires doing it. We have plenty of people that are building a retirement account in something that they know, an asset they really like, and they get to stay independent of an investment in Wall Street or Boston. They get to really be an expert on it. It's been amazing, honestly, for me to talk to some people that they're an expert in real estate, but they're not good at stock investing. We have someone that invests in cattle in their IRA. He's done amazing. In 1 year, he was beating everyone else in performance. And because of his expertise, he's very good at that style of investing. So we just made people aware of that. I think people really did speak up, and that got actually struck from those bills before they reached ever final votes. So even though those bills did die, because of those efforts, and a lot of self-directed investors spoke up about their own real estate and how that's really helped them, the provisions for IRAs were struck before those were kind of reaching final negotiation. So that was encouraging to us. The response was kind of heard, and just so everyone knows, those bills that were on the table have kind of been sidelined or pushed away. So we don't see any kind of Washington type threats on the horizon for the self-directed IRA. I actually think the Roth IRA is under a little bit bigger pressure. You can do a traditional IRA, which is pre-tax. And then the Roth IRA, which is very popular with like Peter Thiel, is, if you get a really explosive asset in there, meaning like in a good way, you start off with a smaller amount, but as long as you keep it in there 5 years, you do not pay taxes. So I always say, you need to talk to an advisor, but a lot of our investors say, I want more in Roth. I want more in Roth. They're trying to think ahead to try and get more in Roth. And even when the self-directed IRA provisions got stripped away, a lot of those Roth IRA provisions restricting Roths started making it all the way to final negotiations. And the bill was sidelined. It did not happen, but I think that just speaks to how Washington ended up responding to that.
Yeah, that makes sense. I appreciate that background. Can you talk through some of the rules that people need to think through? And do you guys advise, like if I'm thinking about doing an investment, and I'm unsure of the rules, can I call and say, can I do this investment, or am I breaking the law somehow? Because I know there's several rules around this.
Yeah, so there's a couple rules that people have to get used to, and I say there is a learning curve for your first real estate investment in an IRA. If you're feeling really overwhelmed, definitely do a passive deal first, and then you can kind of get into more active deals after. So as far as Rocket Dollar, We are not lawyers. We know a lot about these rules because we live and breathe them every day, but we have a big knowledge base that goes over pretty much all the letter of the law and the verbiage in the rules. I'll talk about a few of the biggest ones. Don't invest with, your father, your mother, your spouse, or your kids. That's a big one. And then those people also can't live in a property that you buy. So a lot of people get excited for a vacation rental. And then, they think, oh, this is it's going to make money, but it's also a beautiful location. I'd love to stay in it. The family would love to stay in it. If you have some desire to go there, you probably should not do that one in an IRA. You really can't sell between yourself. So if you have a property you love and you're kicking yourself and you're like, damn, I should have bought this property and put it in an IRA. It is very important you keep those very separate, or you never take a property you own personally and then just shove it into an IRA, because the IRS sees that as, hey, you were supposed to pay taxes on property A, then you move property A into your IRA. Now all of a sudden we're missing out on taxes we were fairly owed. If you had invested in property A straight from the get-go in the IRA, you would be fine. So if you call the Rocket Dollar line, we can give you ultra basic temperature checks. Like, look, this is a law. We're making aware of it. Sounds like you're breaking it, but we cannot really talk about any complex situations. So we'll never say if someone, talks to us about a very complex situation, we'll say, hey, we'll connect you with a lawyer and expert in this space. If you do have a complex deal, some people, they don't want to spend it. They're like, oh, spending, a couple billable hours, is it $1,000 or is it less on a really big deal that's big to your retirement account? That is always worth it. You want to make sure that something's good to go before you invest $500,000 or $300,000 in a property. Just spending a little bit in the whole comparison, the whole deal, to make sure that deal is good to go. That's going to be the best way to go. So again, we can refer people to that. And if we hear something crazy on the phone, look, we'll tell you no, but we cannot really give straight up legal advice and become someone's legal advisor for any deal on the platform.
No, I think that's still super valuable that you will refer over professionals like attorneys and accountants who understand this, because that's been one of our big challenges is, your typical accountant doesn't deal with this a whole lot. They understand retirement accounts, but they don't probably have a lot of clients who have self-directed IRAs and understand the nuanced rules. So it's hard to find someone who can give you, detailed advice when you have, a lot of different, factors that play into a specific deal. So.
Yeah. And this is not to knock like general accountants or advisors. Don't get mad if you talk to your advisor or your accountant, you like working with them, and all of a sudden they have no knowledge of this. This has been a niche style of investing for a while, has been growing quite a bit. I'd say real estate investors and precious metal investors were the first to kind of attach to it and get into it. But I've had 20-year real estate investors talk to me on the phone, or maybe they got referred to us, and they're a little bit shocked and almost pissed they did not know about this.
Yeah.
Stocks and bonds investing has been immeasurably successful for so many people. That's how those companies decided to build their business. When they see this kind of business that we do, they think, oh, this is just too hard. We don't want to deal with that. It's kind of not our thing. So we want a Rocket Dollar. We want to make this easier. We want to refer people to professionals that really need big help. And, it's a challenge for us to find those people as well. We try and bring that together, that community, to get those experts. And then our knowledge base, it has over 200 articles. I wouldn't even call it like a little help center. It's like literally a whole book of things you can search through, look through, and that keeps updating with new regulations or new rules. And once you get a handle on these rules, sometimes people feel intimidated. Once they get through deal number one, they're not usually super psyched for deal number 2, 3, and 4, and really helping to build up that self-directed retirement account.
Can you get loans in your self-directed IRA? If you have, say, $50,000 in your IRA and you want to buy a $100,000 property, how does that work?
Yes. So you can get a loan in your IRA. You can get, it's called a non-recourse loan. This is a little different than a standard mortgage that a beginning investor might be used to. So investors, they have their home loan and then they might be experimenting with other loans. A non-recourse loan means that the bank cannot come after your personal car or home of you or your spouse. So let's say you own property A is your own personal house. Property B is that retirement house, like the $100,000 house, Kirby, that you're kind of looking at. If you signed a non-recourse loan and something went wrong, the bank would just get property B. Even if they were very unhappy with you, they would not be able to go after any of your other assets, which is why it's called non-recourse. So you go to a specialized lender, you get approved for that, and we can also recommend you to some. That's another challenge, is finding a lender that knows this. If you go to any loan officer, they'll say, oh, I'd love to give you a loan for a house. And you go, oh, it has to be a non-recourse loan. They say, oh, I'd love to. And then they go talk to their compliance team, and then they say, no, we can't do this. So just know that with that property, the bank's taking on a little bit higher risk. They cannot kind of repossess a lot of your home assets. So they might adjust a couple percentage points higher on that loan. And they might want to know, even just about your real estate experience, previous deals that you've done. But your personal assets are really not going to be in play. It's the property itself, and if they're trusting you to do well with that property. So to appease those kind of lenders, usually looking for something rent ready, or that you can prove through, is it Airbnb or rentals in your area? You can prove, hey, this one's really simple for me to get off the ground. The banks don't like to do really aggressive fix and flippers like that, because they just know, oh, that's, what if the project goes 6 months longer? What if it takes 2 years to fix up this house? They want something that they can just kind of start working with immediately on that non-recourse loan.
Got it. That makes sense. Yeah. Yeah. So that's great though, that there's that, because one of the big benefits of real estate investing is the use of leverage. I mean, if you, if you have 50,000, you can leverage that many times over in a lot of cases to buy something much more expensive and kind of benefit from that leverage. So you can still do that within your IRA. And one thing I wanted to mention too, that's been really beneficial for us, is actually buying assets that are more affordable, that are high cash flowing and high appreciating, as opposed to something that, is like a passive asset in, in somebody else's large deal that really is the benefits. A lot of the benefits are the tax benefits that are coming from that. Because one thing people don't understand a lot of times when they get into this is that you can't depreciate the asset against your personal income taxes. And that's one of the big benefits of buying real estate as well, is that, you get these big losses on paper because of the depreciation, but you can't access those losses and write them off against your personal income. So what we did is we bought very affordable rental properties within our IRA, which aren't going to have a ton of depreciation anyway because of the purchase price. But yet all the cash flow, they're high cash flowing, high rent. And also they've appreciated really well over the last few years. So all of that is all tax-free growth that goes right back into that IRA. And it's worked out really well. So that's great advice, Kirby. And I would always tell real estate investors, whether you're new or grizzled veteran, is if you're attached to a property and you say, I want to do this deal, never get married to doing it in a retirement account or personal. Always keep an open mind as the numbers and the taxes and everything start flowing together. Because some people ask about 1031 and depreciation and they're like, oh, I'm missing that. Well, why would I do this investment? Maybe it's not a good investment for an IRA. Go do that personally, take advantage of the massive depreciation, find another property where you could have crazy capital gains in a growing area, and the traditional or Roth IRA will protect you from those gains. Big rent checks, you're not paying any tax on those rent checks. And some people forget that they're so obsessed thinking about the property numbers. They're like, well, I'm missing these benefits. What am I doing? The no capital gains is the biggest part of it. And if this is not showing on your yearly tax return. So just think like, would this be a great property to show in my tax return? Is this really going to help in the next few years? Or do I see this one's going to hurt me in my tax return? If it's going to hurt you, definitely try doing that through an IRA. Well, once you commit, just know that you are committed to that property for the long run. You cannot suddenly switch it a couple months or a year in, unless you kind of distribute the entire whole asset from an IRA
then you might have to pay taxes on that all at once, which could be quite a lot of money. So don't get married to it, but then once you do, make a decision for the long term once you make your final decision.
Yeah, awesome advice. Yeah, that's what we noticed. Like my recommendation is just to get it set up so it's there. And then as you're going through deals, you're as a real estate investor, you're constantly looking at deals, and you'll get certain ones that come along that you're like, wow, I'm getting this at a really affordable price, or it's a really, affordable type of deal that I'm not going to really have a ton of depreciation on. So this one might make sense to buy here as opposed to others that I would buy outside of my IRA. It's awesome to have that flexibility. So that's great.
Go ahead. The timing aspect, one last thing, Kirby, you brought up a good point, is get it ready. I would say once you're getting past window shopping, people kind of all have their own processes for kind of how much they speed up. Once you're getting past window shopping, you're saying, I am getting serious. Like I am doing my next deal in the next couple months. Definitely get that ready ahead of time, as Kirby has mentioned, because let's say an amazing deal happens and it's perfect for your IRA. The scramble to get it all ready is so stressful. If you've gotten that up, it's already finishing and you've got your retirement transfer done, you can be going around with an actual checkbook from Rocket Dollar. You can literally rip off a check right there, write that for earnest money or closing, just to, in this crazy market, to keep that investor satisfied so you can lock down that property.
Yeah, I've even heard of, and you can tell me maybe this is illegal, but I know of people who have put offer in, with a off-market deal, go and find a deal. They put the offer in their IRA name, so that's on the contract, and they put the earnest money deposit down from their IRA. Then they end up wholesaling that deal. So they don't actually close on it, but they wholesale it for, say, a $20,000 fee. So they have $1,000 invested from their IRA. They wholesale it for $1,000 fee from their self-directed IRA to somebody else, and they make $20,000 on their $1,000 investment within a 20-day period.
Yeah. So I'd say this is what you have to do is, as long as if your IRA is benefiting, it should be your IRA benefiting from the beginning to the end of the deal. And if you're, let's say you just get rid of the deal really quickly, then it's fine. If you're personally benefiting from it, you should keep it in your personal name all the way till the end of the deal. If you get to a point where you're at the very beginning, you go, oh my God, I made the wrong decision, I have to switch this. You have to make sure that let's say if your IRA is benefiting, the benefit from personal is zero. If your personal situation is benefiting, the IRA money is zero. So like sometimes people put earnest money and they say, oh, I made a mistake, I got to switch it. So we'll say, look, you have to take that money out of the IRA money out of the deal, and personal money has to come in. There can't be any mixing left in when deals are finalized or paperwork is finalized, because that legal record is going to live forever. And that's what's called a prohibited transaction. So keep it on one path only. If you have to switch, you're going to have to make sure you redo all closing documents, because you do not want documentation hanging around of personal name and IRA name mixed up in between each other. That's where you can get at risk and potentially get you under audit. So if they're sticking only IRA, that should be fine. They're doing a legitimate deal. They're giving that off to someone else. They should be okay. They just can't really switch between who benefits.
Got it. Okay. And if there is a prohibited transaction that somebody does, knowingly or unknowingly, what's the consequence of that?
Yeah. So for IRAs, it's pretty severe, honestly. It is the distribution of the entire IRA. So that means if you had, $500,000 in your IRA, you brought a $300,000 property, or, $300,000 ones, all of that would be distributed at the same time. Not just the property you messed up on, the entire IRA. So if that's a traditional IRA, that tax hit can be very high. And, under audit, that's something that you really have to, worry about. So if you have what I would call a gray area, some people will do a deal in a separate IRA. They say, hey, I love this deal, but I've talked to a lawyer, it's still a little gray. They'll do that one in a separate IRA. And they'll do their more run-of-the-mill boring investments in another IRA that's much bigger, because they say, hey, this one has a tiny prohibited transaction risk I can't really predict. I'll do that one over here. If you have a solo 401k, it is a 15% penalty. And that's just really a vestige of laws in Washington. So the solo 401k penalty is not nearly as severe. People in our industry have tried to, do a little bit of lobbying to say, hey, let's make the IRA penalty much closer to the solo 401k. 15% can be a big hit. It's money coming out unexpectedly, but it's not going to kind of destroy someone's entire retirement on there. So I'd say these rules are pretty serious. Definitely read up on them before you start. Once you read up on these rules, though, there's so many things that you can prepare and really go after amazing investments. That there's no real risk to if you're doing this carefully and you're doing it the right way. It's the people that rush in and they decide not to read on anything. I plead ignorance of this. The IRS is not going to care about that. You really have to make sure you read up on your stuff beforehand. Then you can go jump in and get excited about these deals.
Got it. And if somebody has made a mistake or they realize or listen to this and they're like, oh man, I shouldn't invest in that. Is there a way to correct it, or are they just kind of screwed?
So I'm not someone that represents an IRS tax court, so forgive me, but really that person should make all efforts to correct it as quickly as possible. They should keep good records of everything, because if you ever get audited, this stuff will potentially come up. So when the IRS sees your IRA, what they're seeing is they're just seeing the balance. So they're seeing, to Rocket Dollar's custodian partner, there's a balance of $300,000 in an IRA. Then it went up to $325,000. And then maybe someone contributed $6,000, so $331,000. That's all they're seeing at the beginning. But if they ever audit you, they will go in and they will look at all the properties inside of your IRA. They'll make sure you do things properly. So a lot of people will say they'll never know I stayed in a vacation house. I love my rental and I stayed in it with my family, for Christmas, and we had a great time. No one's ever going to know. Is the IRS going to care again if you rake leaves once while you walk through the property? No. But if they find out you did the whole kitchen, and they're like, who did you hire for the kitchen? I don't remember. Well, who did it? We see Facebook photos that posted all over your Instagram and Facebook of you staying at the property.
Yeah.
This seems like a really clear prohibited transaction. So, these are rules that it's like some of the risk of them is lower. Investors kind of wave it off. You really shouldn't. It's just easier to stay compliant on this stuff. It's going to keep you breathing easy, because going under audit and this type of stuff is not fun. The staying in it is probably the biggest one that investors kind of flippantly think they can violate it. And some very hands-on investors, they just, they renovate all their properties, and then they get an IRA property and they say, oh, I have to have a handyman, repairing things. Oh, I'm not confident in their work. They just try and do it themselves. You should not. You should find someone. You could even hire brothers, sisters, aunts and uncles. Really, the people that cannot work or cannot stay is the vertical family, parents, grandparents, and kids, and your spouse, because they don't want you kind of dodging taxes, or parents and kids kind of come up with really creative ways like, oh, I can totally avoid taxes on my parents' house. No, the IRS has kind of thought of that already. They've thought of all of that.
Yeah. And that's that. I think that fear of violating the rules or not knowing about a rule is a big thing that holds people back from doing this. Do you know by chance? I don't know if this is a statistic you would know, but out of all your clients, about how many have had a prohibited transaction?
Yeah. So I don't know that exact number. We've dealt with customers that, they come on the phone and like, oh my God, I feel like I did something wrong.
Yeah.
So I'd say we've really striven for education in this space, which we feel that's been lacking. So that's not something we deal with like every day, because a lot of companies have kind of withheld knowledge. I don't want to try and accuse them of anything, but I think they just don't share a lot of knowledge with clients. And I think that gives them a little bit of an information advantage that allows them, we can charge these customers, we can get a lot of money off of them. They get to retire, but like if we hold the knowledge, we hold the power. Rocket Dollar, we feel like the opposite. If we really empower the customers, that's why we publish so much online for people, is if we have a lot of smart investors that say, hey, I want to learn the rules, but I can't find them. I can't find good help on like specific or weird situations. So we said, hey, if we put this all up online, the education level is going to go up and the confidence level is going to go up. So we rely on a lot of partners like yourself, honestly, to say, hey, let's educate someone like Kirby about the rules, help him get that out to his entire audience. And we have plenty of resources on rocketdollar.com and then the knowledge base section of our website.
Got it. Yeah. Well, that's super helpful. I appreciate that. Really good info. And so if somebody wants to open an account with you guys, what's the first step they should take?
Yeah. So they just go online to go to rocketdollar.com and then you can click to sign up. Now, I would say for a real estate investor, maybe just do a quick call to their sales team and talk about what type of real estate investing you're doing. Because the biggest decision that you could probably make is I want to do direct custody IRA, like maybe some passive investments. I want to do an IRA LLC or checkbook IRA because that gives you a little bit more flexibility to kind of navigate little transactions. Or I want to do a solo 401k. And we didn't talk about that too much, but it really works well for a solo business owner. It has more tax advantages for mortgages, the lending and leverage that we talked about. And it does have that lower penalty level as well. So for solo business owners, which are many, or with your spouse, many people that work in real estate, the solo 401k can be a great option. So I'd say first step, go to rocketdollar.com. Feel free to check in with our sales team if you need it. Then you can go sign up online. And we're going to make a $50 off code for living off rentals. Just living off rentals, all one word. Not live this second if you're on Facebook, but we'll get that live in just a minute here.
So it's I'm sorry. So it's rocketdollar.com/living-off-rentals, all one word.
It'll just be rocketdollar.com. And then near the end of the checkout process, it'll say, do you have a referral code?
Oh, okay.
And we'll just put in living off rentals into that box there. And that'll give
Awesome.
you $50 off any account that you open.
Cool. I appreciate you doing that. And yeah, that's great. This has been really, really helpful information. And I really appreciate you taking the time.
Thanks so much, Kirby. It's great to see you again.
You too. Take care.
All right.